Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. Hey everybody, welcome back to another live stream. Happy Tuesday to you. Thank you for being here. We have a question. Do people actually take trades and win on here? Sometimes, sometimes not. One of the most common, I say it all the time, one of the most common things that new traders don't fully understand about trading is that no one, not even the greatest traders of history, know with certainty where the markets are going to go. They can make educated guesses. They can manage their risk. They can set up, a stop loss and manage the position. But if you're looking for anyone on internet that takes winning trades all the time, you will be disappointed. The reality is that, whether it's me, whether it's anybody, nobody's right all the time. But the good news is you don't really have to be in order to make money. Let me explain. Let's say you have, hold on, I got to fix my drawing tool here. I don't know why that happens sometimes, but it just stops working. Let me show you just real quick, like this, this is what people think trading, good trading looks like. They think that with a 1-to-1 risk reward, you can win 80% of your trades. That's what they think good trading is. And let me tell you, if you could do this, you would be unbelievably wealthy real quick, even if you started on a really small account. The reason people aren't doing that is because markets are simply not that predictable. So part 2 to that, what is realistic? Well, if you're really good on a 1-to-1 risk reward ratio over thousands of trades, if you can hit like a 55% win rate, you'll do just fine. The problem is expectations are for that first example. Reality of great traders is this, okay? And you can change your risk reward ratio and it will correlate or inversely correlate to your win percentage. You increase your size of winners relative to losers, your win rate will drop, and vice versa. But great trading is slight edge applied over many, many trades. It's why good trading is pretty boring, because you're going to take a lot of losses, you're going to take a lot of wins, and the idea, this is what new traders think good trading results look like. Good traders know that it's more like this. This is what a good equity curve looks like, okay? And what's not fun about this is that a good equity curve does have gains, but they're gradual. Whereas people think good trading looks like this. So with that said, just do 2-to-1 with a 50% win rate. If you do this, so even this royal trades, that is God tier trading. Nobody does that. That is like, you might be able to do it for a few months if you have a good stretch, but even 2-to-1, 50% win rate, that is God tier trading. And nobody does that. It sounds so easy, But in actuality, it's so hard. The good news is you don't even need that. You can do a 2-to-1, and if you have a 40% win rate, that's great, right? Again, if you do enough back testing, you'll figure out like, oh, yeah, trading's like ridiculously hard. So yeah, 2-to-1 video, like it's hard. That is insane trading. Again, if you do that for a little while, then great. But like long term, nobody keeps up 50% on a 2-to-1. Like if you can do that and plug it into a track record site like MyFXbook or something and show that, dude, you are legendary. If you do that over 1,000 trades, you're a legend. I don't do that. I wish I did that. It would be amazing. Anyways, this morning we had some headline news hit the wire with it seems like Iran and the U.S. potentially posturing to make a deal. I am long oil. I gave back a bunch of profits here this morning. We were floating some green, but of course, with the news, price coming down a little bit here on oil. I'm not too worried. I still like the thesis for oil longs, and I'll stick with my trade unless we break through structure. If we fail to hold support, then I will get out of the trade. But I do still like overall the Goldilocks kind of demand side for the economy. What I mean by that is we have cool inflation and we have decent jobs numbers out of the U.S. What kind of takes away from that is this morning, the UK had some not great jobs numbers. UK 10-year yield moved lower here this morning, as well as the British pound against the US dollar. I was looking at here this morning. If we take a look at our economic heat maps, by the way, I added the economic heat maps to its own tab within EdgeFinder. I felt that this was a little bit easier to find, and this layout could get confusing. So a lot of people love our economic heat maps for good reason. I love them too. So let's take a look at this. If we look at this, right, unemployment rate here ticking to 5.2% in the UK. And I want to look at that over time because I believe that if we can pull up unemployment rate specifically for the UK, yeah, so the UK's unemployment rate continues to rise. It's at 5.2%. That is the highest that it has been in multiple years. And so I think that the Bank of England is probably going to need to cut some rates soon. The challenge for the Bank of England is that they also have high inflation. Like this is a tough circumstance for the UK. 3.4%. They had a higher than anticipated inflation reading here recently. You also had rising unemployment rate. So when we look at the UK economic heat map, you could see, again, unemployment rate ticked higher than expected. That was a negative surprise for both the UK stock market as well as the British pound. We also have seen sticky inflation, slightly optimistic for the currency, but not great for UK stocks. UK stocks getting a pretty bearish reading, by the way. If we take a look at GDP, February 12th, we got some statistics there, came in lighter than expected. So the UK looking a little bit rough here. And I wouldn't be surprised if when looking at the British pound, you do see continued downside move. We also saw this morning the pound yen move sharply lower, breaking through support here. So for my currency traders, that British pound, at least for now, seems to be losing its steam. Right, you had this upward structure. The British pound was strong for a little while, but some of this latest round of economic data really, to me, signals some dovish rate cuts coming for the Bank of England. So I would not be surprised to see the British pound against most currencies continue to move lower here in the here and now. And so we've got to keep watching that. I thought that was worth mentioning as we did get some pretty indicative employment statistics out of the UK this morning, showing some weakness on that front. So we also see here in response to this stuff this morning, the gold market and silver market, precious metals moving lower in response to the headline that just came out. Of course, the hour just turned here. So we're getting a little bit of a bounce, but watch gold and silver here. I've been mentioning that I wanted to see gold and silver for possible longs get above, sharply this 5,100 level. We just didn't get it. So for now, I continue to be cautious and pretty neutral on gold. I'd like to see price be able to confidently break through these levels. Some weak employment statistics out of the UK does slightly bolster the case for gold. But again, out of the US, we had some pretty strong jobs data. So a little bit of a mixed view on that front. Taking a look at the asset scorecard here for S&P 500, we continue to be neutral. If we take a look at gold, we've slipped back into neutral territory with technicals leaning more bearish now here, as well as some institutional selling on the commitment of traders data. So I've been watching for that gold long setup, but it's just not showing up. It's just not right for me right now. And I'm glad that I didn't take anything because, again, we have rolled over for now. So I'm going to continue watching gold. But this is a sleepy chart for me. I need some breakouts, right? I need something like this to take place to the upside. Or, if we didn't get hot inflation, but had we gotten inflation hot, I probably would have been looking for short setups below these lows. Just didn't quite get that. So we'll see. Let's see. Let's see what else we have. US dollar. US dollar generally getting a +3. But the other thing with the dollar index is also the dollar index a little bit mixed here. If you take a look at the daily time frame, looks like we're trying to bottom out here. If you do see price break through this level back above 98, that to me could signal some strength for the US dollar. Again, kind of mixed on USD right now, just because we're getting that neutral reading. So we'll see. Snake Bites asking, do I make more money basically from trading or from business? Business, 100%. I have a software company. I dedicate way more time to building software. It's a passion of mine. I went to school for software engineering. I do make good money trading. And I've, shown many times my track record for that purpose, but I make money in both ways. And if it was proportional to how much time I spend these days, in terms of like my actual trading time, probably an hour a day, not too much more than that. But I spend a ton of time software developing. With our team, we have, as you can imagine, we have thousands of people who use our tools. It's a full-time job for me. My trading is obviously something that I do, and it is a meaningful component of my income, proudly speaking. But at the same time, the software business is a full-time job. It is a full-blown entrepreneurship, right? And I love it. I love it every day. Could I live solely off my trading? I certainly could. But would that be fun? No, I would be bored. In fact, I did that briefly, and I just didn't like it. Before I kind of kicked off A1 trading and really went into the business side of trading world, I traded and just had a YouTube channel where like the two, I had enough income to just live, and I didn't have to have anybody, on my team or anything like that. It was a small operation, and I hated it. I like building stuff. I like sharing content with the world. I like, building tools and things like that. So there's your real answer. I mean, I'll never shy away from it. We make money in both ways. Trading profitably is something that took me years and hard work to do. And I love sharing that passion that I've built for markets with people on social media. Why don't you start a fund? Easy reason I won't start a fund. Because I don't want to deal with the people who don't really know much about markets, who want to just invest with me and just have, the thing is, people who are new to trading, just simply, it's not their fault, but they're naive and ignorant to like how actually profitable trading works. If you start a fund, you deal with people inevitably. I have friends who do this. Chris Pulver, right? Even like people who manage money for people that don't know anything about markets, they expect to collect a easy paycheck and for their account to always be going up. And as a trader, I just know that's not how it works, right? So for me, I'm not really interested in managing other people's money and taking their phone calls. Transparently, I make enough money to where I'm very happy with my lifestyle. I don't necessarily need the added stress of managing a bunch of people's money. Gold down almost 2% here this morning. Silver also cannot get out of its own way. It seems like every time silver tries to get a little something going, I'd be looking for, if you want to talk about silver price action starting to become bullish, it would have to be like breakouts back up into the 90s for me. Like these technicals look really rough for silver at this time. Yeah, if you could get above the 90 level and some dollar weakness in the form of economic data to go with that, maybe silver's the setup for me. But right now, kind of neutral on it. You know, to be honest, I have a lot of setups that are, or a lot of charts that are neutral for me right now. And only a couple, mostly on the currency side, that actually have some conviction behind them. The Australian dollar is getting some decent readings. The pound Aussie is actually probably one of my top contenders in terms of fundamentally. I'm bullish Aussie, bearish pound. So if we were to take a look at that currency pair, my friend Forex James, who comes on the show here pretty frequently, he caught a monster winner on this trade, and I'm super jealous. Pound Aussie has been a pretty consistent bearish setup within EdgeFinder. He caught the short. I did not. I am still looking to, I think there is more short side opportunity on this pair, at least for the here and now. If I were to mark up this chart, though, the issue that I have is that we're pretty far away from where I could even justify looking at possible shorts. But that 38.2% retracement comes to mind as a aggressive short side setup. And I don't mean aggressive in position size. I mean aggressive in terms of that's a pretty narrow pullback after a pretty oversold chart. But again, we say this all the time. Oversold can get more oversold. Overbought can get more overbought. So for now, though, pound Aussie continues to be a really solid sell side move here. Congrats to anybody who caught that. I wish I did. It was one of the cleaner setups on EdgeFinder at the time, but I just didn't catch it. Euro Aussie, same. Look at this. Continues to slide lower. We hit some, pretty longer term levels of support here, but I would not be surprised if this thing, were to pull back, that it would be a pretty aggressive response from sellers. At least for now, the Australian dollar looks really strong to me. If we take a look at, for example, let's go economic heat maps, AU economic heat map. So you can see here, the Australian dollar getting a pretty solid score. So when we talk about like score, what does that mean? Like, what am I talking about when I say the Aussie dollar looks strong? Well, manufacturing PMIs, they're at 52.3, which is still solid, but that did miss expectations. So that's not great for the Australian dollar. But services PMIs came in rock solid. That is bullish for the Australian dollar. Retail sales were strong. That's bullish for the Aussie dollar. Inflation came in a little bit hot, so probably going to continue to push back on how much the RBA is willing to cut interest rates. That's a little bit positive for the Australian dollar. Unemployment rates at 4.1%. That's a very healthy level of unemployment, and it beat forecasts pretty notably. We also, the downside here, not so great. GDP growth was a little slow. But all in all, I would still say that relative to some other currencies, specifically the Japanese yen and the British pound, I do like the Australian dollar on the long side. Another one I would keep an eye on is this Aussie yen pair. If this does continue to pull back, that 50% retracement looks really interesting to me. Even at 38.2, but the choppiness on this level I'm not as interested in. I like this very clear level of support that we have at the 50% retracement. This may be a setup for me, depending on what EdgeFinder says at that time. What about pound CAD? Yeah, let's look at it. So if I take a look at top setups here, actually, we can use the Forex scorecard here for this. So let's go pound CAD. So if I take a look at pound CAD, it is getting a -6 reading. So what that's going to tell me is that most of our indications are bearish. And you can kind of see visually, I really like this tab because it visually tells you pretty much everything you need to know from a macro perspective. First of all, our moving averages are all lined up. So we have a very bearish looking chart. We know that. We also have an overall EdgeFinder bearish bias. Technicals look bearish. Institutional activity is bearish. Sentiment activity, crowd sentiment is bullish on this pair. It's giving us a bearish contrarian reading. Jobs market data leans favorable towards the Canadian dollar. And the only one that kind of goes against our idea is inflation, a little bit more sticky for the British pound. So all in all, that -6 reading would be enough for me if we had a nice technical setup to potentially look to short pound CAD. So pound CAD, let's just start fresh on this chart here. What I don't love about this is that the technicals are pretty choppy on this pair. What I'd be looking for, I know this is not a really exciting answer, but it would probably have to be a break through these lows and a retest of that area to start to get interested. But that could be, 2 weeks away. So not really an urgent setup for me, but I do like the fundamentals setup here. And again, this Forex scorecard here is really great if you do trade currency pairs. You can take a closer look at the comparison of them. And so, yeah, we'll see how that plays out. But I do generally still like pound Aussie more than pound CAD, and pound dollar getting a bearish reading, which I think is kind of interesting. Pound dollar dropped pretty hard here this morning. Again, you had UK employment numbers that were really rough this morning, causing a downside slide on pound pairs. So I do like probably pound Aussie the most on the short side, and we'll see. UK rate cuts are coming next month, according to our FedWatch tool equivalent. Fair enough. Yeah, so we'll see. We'll see. Yeah, not the greatest pound CAD technical setup there. I agree. Let's see. A little bit of back and forth here this morning on U.S. indices. Taking a look at the NASDAQ daily chart. I've said this, and I'll keep saying this. I wouldn't be surprised if the NAS is going to pull back a little bit more here. I made a comment inside of our Discord here. If you're part of our Discord, then make sure you're staying up to date on some of the conversations we've been having, because it's been good stuff. I've been chatting a lot with people. So somebody asked me, this person, if you're in the live stream, say hello. Said, I know that bottom picking is risky and this is only a long-term move, but could you let us know when you anticipate buying software stocks which are oversold, or would you prefer to buy an ETF like IGV is now not worth the risk? Thanks. Great question. So thank you for that question. I responded to it, and this is my take on it. So I said, great question. I personally prefer the idea of selecting a basket of individual stocks. And this is, as always, you can see it on the banner below me. It's not financial advice. I'm simply sharing my thoughts on this because there is a ton of risk with this, because software stocks are getting pummeled here. I said, I personally prefer the idea of selecting a basket of individual stocks that I like within the software sphere rather than buying just the IGV. If you don't know what the IGV is, let's just clarify that for people listening. The IGV is a software ETF. What that means is that this ETF, it's a basket. Think of it as a basket of stocks, a basket of tons of different software stocks, right? Which have, as a group, you can see, have fallen very sharply. And the question, there's a debate, and I'm curious what you guys think about this too, but IGV or individuals? That's the question. Now, when you buy the IGV, you get the diversification to an extent. They're still all software names, but you get a spread out bet on software where you're betting, like, I think, generally speaking, software stocks are oversold. And then what I kind of alluded to in my message was that I like the idea of buying specifically some companies that I think are less likely, still possibly disrupted by AI, but less likely to be made completely obsolete by the AI stuff. Okay, so I think software stocks are also oversold, but we'll probably watch names like Intuit, Salesforce, Microsoft, etc. I want to clarify something though too, because the next message I shared is that my personal opinion is that AI disruption concerns will not go away quickly, and that it could cause a more sustained debate, aka downside, around these names, hopefully producing some nice discounts for those of us that think software stocks have longer term upside potential. What do you guys think? What do you guys think on this? Give me let me think. I can poll the audience a little bit here. Do you think that software stocks, one or two, do you think that they are close to a bottom? Give me a 1. Or 2 if you think there's more bearish downside. So again, 1 if you are bullish right here, if you think software stocks are going to start to bottom, or 2 if you're more of a bear. And think of this kind of as the NASDAQ, right? You could kind of swap this out for, like, on the NASDAQ. Do you think NASDAQ has some more downside pain to this? Or do you think that we are close to a bottom and that we're going to reverse higher? I'm curious what you think. because again, this is probably, in my opinion, the most interesting thing happening in markets right now is this software stuff. Because I'll tell you what, guys, you're either looking at a time where we will look back a couple months from now. I know this is stating the obvious, but think about this with me. We're going to look back a couple months, maybe a year or two from now, and say software stocks were either dirt cheap or on the way out. And I think that is not an understatement. Like, there may be a fair case. You have stocks, a lot of stocks. Let me show you. Okay. You have a lot of stocks that are trading at historically very cheap valuations relative to their own history. Take a look at Salesforce with me, okay? So we're looking at CRM. This is Salesforce. If you're unfamiliar with Salesforce, they make all sorts of tools. It's a CRM company. They build dashboards and tools, automations for businesses to manage their Salesforce. So check this out. Historically speaking, in the last 3 years, the average PE ratio, price of the stock relative to the earnings of the stock, has had a PE ratio, forward PE ratio of like 32. It's had a trailing 12-month PE 160. Like, it's been very expensive. The price to sales at 6.81. All of this to say that right now, the stock, which has still got solid earnings growth, etc., is trading at just 14.46 forward PE ratio. It's trading much cheaper than it usually does. Now, the bulls would say this is a bargain price to buy Salesforce. The bears would say the 3-year average is dangerous to trust because going forward, the earnings of these companies, these software companies, are going to get destroyed by the AI stuff that's coming. That's the debate. That's why it's so fascinating. So I'll share my thoughts and opinions on this. I think that software stocks, a lot of them are getting overdone. I personally think that names like Intuit, again, not financial advice, I'm sharing my thoughts and opinions. Intuit, I think, is looking pretty cheap right now. Now, I am not taking this as a short-term trade. This is not something where I'm saying I'm going to go buy Intuit right here, right now, and I'm looking to put a tight 1% stop loss below, and I'm looking to ride it all the way back to highs. Not really for me. I'm talking about I'd probably sell some cash secured puts, essentially looking to buy the stock longer term, build a position, and sit on it for a couple of years. Maybe that's the wrong call, but that's probably how I will take this dip in software names. I mean, here's Intuit. You can see the stock has gotten destroyed, 51% drawdown, right? So you're seeing a lot of stuff. My point, though, is when I'm talking trading short-term stuff, I think there is short-term more downside as the scrutiny of these names continues to remain. Like, I don't think that this is just going to, tomorrow we're going to all agree like, oh, no, actually, software is not going to get killed by AI. I think this is going to be an ongoing debate. And so that ongoing debate, I think, will cause a lot of tech stocks to continue to potentially underperform and maybe see some downside in the short run. So I'm not willing to short the market on that basis. For me to short the market, I need like a macro, clear and obvious GDP growth is in the gutter and inflation is high or something like that, right? I need like a really challenging macro side. I don't see that right now, but I do see that the narrative around AI and the disruption stuff could continue to play on for a while. And in my opinion, and fingers crossed, it gives some great discount opportunities and some stocks that we like for the longer term. Nick, Walmart looks good on a pullback. Man, I'm with you on that. The problem is I've been saying that for a minute, man. Like, I've wanted to own some Walmart in my portfolio for a while, and now I can't justify it. Like, look at this real quick with me. Walmart, I get it. It's a phenomenal business. But you are talking now, this stock is really expensive. Like, Walmart is really expensive. No dispute, no debate. Walmart is expensive relative to its own history. Okay. Now you may say that's justified. That's where the debate lies, is it should be that expensive or it should not be that expensive. If you want to get into individual stocks, go crazy on it. You can debate that endlessly. But to me, Walmart's just too pricey relative to its own history. You give me a couple months down on Walmart, I'm probably going to step in and buy some Walmart shares. Anyways, by the way, this is the stock box. We've been working really hard on implementing some new features within Stockbox. I'm really excited about it. I've been using it constantly to scan stocks that I'm personally watching myself. It gives you an overview of the financials. It also shows you upcoming earnings reports. We have some technical trends or trend readings, oscillator readings, analyst ratings, volatility scanners, all sorts of stuff. If you're a stock trader or you're aspiring to be a stock trader, investor, options trader like myself, whatever you do, if you're interested in the stock box, we are going to extend the 40% off discount that we're doing right now to also the stock box. So if you're interested in it, stock box and EdgeFinder, SB and EdgeFinder are currently 45% off for live stream viewers. Last week, we did a free week giving people a chance to try out our software products. This week, we are... And you wonder why I'm so bullish on software names. I run a software business. I might be a little bit biased, but I don't see, EdgeFinder or Stockbox. People love our tools, not necessarily because, sure, you can ask AI tools. We implement a ton of AI features within EdgeFinder and Stockbox, but people like the visual representations. They like to be able to click through and navigate and visually understand what is going on. And that's what we specialize in. So anyways, Stockbox and EdgeFinder are currently on super sale right now. If you would like some information about that discount before it ends, we'll drop a link here in the live stream chat to where you can speak directly to a member of our support staff. These are real people, not robots. We employ real people. Send us a message. Let us know that you're interested in either the Stockbox or EdgeFinder, and we'll get you that 45% off discount code so that you don't miss that. What's the reason for not doing a 50% discount? We don't do 50% discounts. The 45% off is the lowest price that we go. So there you go. Okay, guys, up next, we have the one and only Tiger Barry stepping in to take over the stream here for a little bit. I'm excited to see what he has to say here with some of this currency stuff going on. There's some really interesting currency moves taking place. So if you're a Forex guy, girl, stick around. Tiger Barry is an FX specialist. So stay tuned. Here he comes just after this quick break. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Well, what's going on, everybody? Tiger here. Let me get my screen shared. Get this shared real quick. La, 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 la. There we go, ladies and gents. Let's get that popping on. I can confirm they are not robots, okay? Miss Emily helped me out with my EdgeFinder, my stock box. They're real people. They have pulses. Okay. So definitely hook up with them. They're incredible people and they're very helpful, especially if you guys, like he mentions all the time, if you need like a payment plan or something of that nature. Okay. I was struggling pretty bad there at one point whenever I got hooked up with mine, and Emily worked with me on the deal. So definitely hook up with them. Who's this cowboy? This is Tiger, guys. But as always, guys, if you have any specific tickers you'd like checked out, let me know. I've got a couple things going on right now. One currency trade, and believe it or not, I'm still in a NASDAQ trade from last week. Now, NASDAQ is not given a bearish or bullish signal at the moment. It's back to neutral, but it's -4, so it's right there. Am in a short position on it. Let's just go to the NASDAQ real quick. I got into it off of a 4-hour supply zone bounce to the downside. Where you at, NASDAQ? There you are. Okay, so if we go to a 4-hour time frame over here, I was basically looking at this spot right here. Okay, this little 4-hour candle. We had a pretty good drop. You guys see I kind of visualized the fair value gap coming out of that. Pretty good volume spread analysis activity on that yellow bar down here on the leg out. So it looked pretty strong to me, guys. Broke some structures and kept going. So I was basically looking for a retracement back to it. Ended up getting into the trade. Actually, I think it was on this candle here after about an hour or so after it had closed, or it had touched into the supply zone itself. So as you can see, guys, sometimes you just got to sit on your hands with these trades. It went down, up, went sideways for a while before finally catching a drop to the downside. So currently the trade's looking pretty good. I've got a profit target down at the bottom down here. So I'm just going to let it do its thing. Okay. The last thing I want to do is take away my profits and close it out early. You know, when you do your analysis on something, you set your targets, let your targets be. This is one of the hardest things with trading is abiding by your own rules, right? Yeah, I could close now and take a pretty decent profit, but I want to wait. So that is the NASI. Again, it's a -4. It's neutral, but just because it's in neutral territory doesn't mean I just want to go out and close it out. I want to let it do its thing because I still believe in the technicals. And it just so happened that technical, you know, that supply zone I got in was also coinciding with a blue dash line, which means somewhere off to the left is a former support or resistance, in this case, resistance. That worked quite well. So NASI looking good. And then the other trade I'm in at the moment is Aussie New Zealand long. So if we go to the top setups real quick, it's a little bit on the slim picking side, guys and gals. Okay. A little bit on the slim picking side. We do have some 5s and -5s. I know we all kind of talk about it from time to time, but I really like the stronger scores, the 7s, the 8s, the 9s or higher, or the same thing in reverse, -7, -8, -9. But currently we just have a couple. Okay. But when it comes to Aussie New Zealand, it has given me a 5. So I did hop into an Aussie New Zealand over here. Let me go click on it. We'll take a quick look at it. We did drop into a 2-hour demand zone. Yeah, that's a funky time, but hey, whatever picture draws me up the nicest picture, I'll take it. Okay. Dropped into this. Let me just turn off my drawings for a second. Okay, looking at this candle back in time, we had a nice leg out, broke structure, volume increase, and then kept going. So that's really the starting point for this trade. And let's see here. The other thing I was observing was the fact that on a 1-hour time frame, okay, RSI had dropped below 20. So oversold. That's this red dash, this red line down here, guys. I look at extremes now. This is one thing I actually kind of picked up on. I had a 4-day class last week, guys. I was on London time, so I was up at 2 a.m. Needless to say, it was a very sleepless week. But yeah, I got hooked up with a firm that went through a couple interviews. Long story short, they gave me a funded account. So as part of that, I went to learn their strategy. Okay, pretty good strategies. And the cool thing is it works seamlessly with what I already do with supply and demand. It's basically acting as a bit of a filter. Okay, so it basically entails RSI, extreme readings on 20s and 80s, depending on if I'm buying or shorting. And then look at some moving averages, guys. So starting at a daily time frame. And if I look at my moving averages here, this red line is my 8 EMA. So that's exponential moving average. And then the light red is a 21 EMA. So the whole goal here is just to make sure I'm in line with the trend. Higher highs and higher lows is how we define it. But if you have an 8 above a 21, this was a new addition, if you will, to the world of Tiger as far as just verifying trend. So trend up, okay, and it's matching what the EdgeFinder says. So that's a plus. And then from here, we'll go down to a 1 hour, and make sure. And now we're looking at 2 different moving averages. So we're looking at this light blue, which is a 50 EMA, and then this dark blue, which is a 200 EMA. So the whole goal here is to make sure the 50 is above the 200, right? That's the whole goal. Price returns to the moving average, but you guys know me. I like looking for the unfilled orders. So I'm not going to buy just because it pierces the 200. I got to look for a demand zone. Found my demand zone, 2-hour demand zone, okay, and waited for the 1-hour close, showing that the momentum has changed, which is also very similar to what you guys have probably seen me draw up a time or 2 or 7 or 107. Hey, the break of structure. Price drops into a zone. We break structure like this, okay, get a close. that shows we have a new impulse leg. Impulse legs show that we are, at least trying to turn around. But then we obviously retrace, because a lot of times you'll get a nice newly created demand zone at the bottom of that impulse leg, or you can use a 61/8 fib retracement, however you want to look at that. But then we buy when we hit the retracement of that zone. So that's obviously that's my favorite. That's my preferred way of getting into trades, whether I'm buying or shorting. Just flip it if you're looking to short. But the other way is to look for a good solid hourly close. So that's where I got into this trade at. The other thing I like about this is the fact that we hit some liquidity pockets. We had a little bit of a double bottom. We had a bottom here. We had a bottom here just above the demand zone. And you guys see I drew in a couple red boxes. That's because there should be some sell orders there. Right? Think about it. These buyers here that had the strength to push price up, they had to put their stop losses somewhere. Stop loss below their buy points. Just so happens it's right in the middle of that demand zone. Okay. So unfilled orders here from the demand zone itself. And then you have a couple liquidity pockets from this double bottom. So you get a nice little, I guess you'd call it just a little drop, a liquidity sweep. A spring. Okay. A spring for anybody that understands Wyckoff theory, right? So that's where I ended up getting into the trade after the 1 hour close, and it's looking pretty good. Okay, just looking for a simple push back to the swing high. Just a simple trade. Okay, it's about a 2-to-1. That's it. And as always, guys, anytime we get into a trade, no matter what your trading strategy is, it's always good to look at it in the view of an optimist, meaning, hey, what could turn this trade against me? Right? How could this trade go against me? So I like to draw up things like, trend lines going down, connected points to see and make sure that we're not just going to get a bounce and take away all my unfilled orders, right? Take away all my unrealized profit, right? Because currently it's looking good, but I got to be aware of it when we get up to spots like this, or when we get into a overhead supply zone, something like this right here, guys, right? The origin of a strong move down. So that's points right there I want to be aware of. Let me just get rid of these drawings. Okay. So always look at your trade, whether it's winning or not, in the view of an optimist, if it goes against you. Okay. We have to play the devil's advocate. Okay? It's not fun. It's not exciting, but it is relevant. Because the last thing you want to do is get up a 2-to-1 reward risk or a 3-to-1 reward risk, and then it bounce into a spot of contention like this, or maybe it's a 200 moving average or whatever the case is, and just completely erase all the good that you did, right? So just be aware of that. I mean, that's part of the reason I like to move my stops to break even after I achieve a 1-to-1 or 1.5-to-1, 2-to-1, just depending on the trade itself. Because at that point, it's made a decent move. Right? We don't want to just take a needless loss. What's going on, ball out? What we got here? Yeah, as far as RBNZ, guys, we got that later tonight, 7 o'clock my time. I'm here in Kansas City, so it is coming out at 7 p.m. Projected to keep rates the same. Yeah, I mean, with this Aussie New Zealand, I mean, definitely my goal is to be out of this trade by the time 7 o'clock rolls around. Okay, I'm an hour behind Nick and company, so I'm here in Kansas City. So by the time we get up here, going back to my Aussie New Zealand, I'm probably just going to get out of this trade. If price is somewhere in this area up here, I'm out. Okay, I'm going to get out because you never know. I mean, they're projected to keep rates the same at 2.25, but what if they go 2.5? What if they go 2? Right? You just never know. And but yeah, by then I'll be out of this trade. So and as far as the rest of the day, besides these two trades I'm really managing, guys, I mean, I've got some alerts, but again, it's for me personally, yeah, it's just a little lackluster. We can take a look. I do know that the pound CAD is just kind of overall kind of choppy as far as the way I was looking at it anyway. Let's take a look at pound CAD. Okay, go to a daily chart. Oh, no, maybe it was pound Aussie. No, it was pound CAD actually. Yeah, that's right. So pound CAD, which is our strongest bearish asset, that sounds like a double negative, huh? Our weakest, call it the weakest. Well, we're kind of down in a discount zone. So do we really want to be shorting in a discount zone? Not really. What's a discount zone? Well, it's your swing low, your swing high. And then for me, I just like to wrap a trend-based fib line on it. That way it breaks it up into 3 quadrants, right? Lower third, middle third, higher third. We're in the lower third, so that's a discount zone. Right? I don't want to be selling down here. I want to wait for a retracement up to the premium. I don't want to sell my used car at $10,000 down here. I'd rather sell it up here for $15,000. Remember, buying and selling in the markets is the same way you should be buying or selling anything else in life. Right? I like to say that from time to time because it's a good idea to do it. What's the reality? What do most people do? Do the opposite. Right? They're buying at all-time highs. They're selling, selling after it's already made the move down. So just kind of keep that in mind. Yeah, I like to use the used car analogy. Why do I want to sell my used car for $10,000 down here when I can sell up here for $15,000? And that's based off of swing lows and swing highs. That's your curve analysis, guys. Curve analysis, real important. And then obviously the middle, I color it red for a reason. Don't diddle in the middle. Otherwise you get chopped to pieces, right? So, but yeah, for me, I kind of drew up a very similar framework to the Aussie New Zealand I'm in. Got a supply zone up here. Now it's been touched on the 30-minute? I think I drew it up on a 30. So think about this. And this is another -1, if you will. Okay. There's your 30-minute supply because we had a really nice leg out. Structure's broken, increase in volume spread analysis, but we've already touched it. It's already been mitigated, guys. Right here. But let's go down. See what a 15 looks like. 15-minute. Now we're getting down in the smaller time frames. And remember, the smaller you go, the noisier it gets, right? Where am I at here? Supply. So yeah, here we go. So, if you look at this on a smaller time frame, then this is what the candles look like. Right? Again, really nice drop, but we haven't yet touched the 15. So I'm considering that. If I get everything else to line up, the moving averages, the RSI, if we've achieved if we've gotten over the 80 level, and then look for that close down. So possible sell up here, but that's a long ways away right now. Long ways away. A lot of pips, right? And pound CAD, I do believe moves at about 95 pips a day on average. So we could get up there the next day or so. But it's just too cheap to be selling down here, guys. That's the strongest bearish asset we have right now, right? So not really a play on that. I think I'm mainly going to be, I'm just mainly going to be managing these 2 positions I'm in. Let me see here. British pound is a sell this year, my friend. Nope. Guys, I do want to mention Ola Prime, which is a company I used to work for. Nick does have a pretty special discount hooked up with them or set up with them. You can actually get I believe it's a 35% off. There's a QR code right there underneath my mug. Okay. QR code. And then there's also the code itself, A1T35. If you guys are looking for a prop firm, I would suggest checking them out. Okay. This is the Ola Prime website over here. So you can go and check out whatever, strategy you're looking for. You can just go into trading plans or trading rules right here. And the one thing I like about them and that I loved working with them for is the fact of how transparent their trading rules are. Okay. And they do payouts in 1 hour, by the way. They've got this crazy 10-point payment system that they have. I do believe there's a link on here if you guys are interested in that. Yeah, 1 hour payouts. Okay. Just go to olaprime.com. Click on About Us, go down here to 1 hour payouts, and you'll see how they do that. But yeah, guys, this is a pretty good one. I'm no longer with them, but I still think that they're the best. I mean, transparent trading rules, no silly, crazy, rules that like to kick you out of trades. There is a 40% consistency rule on most of these challenges, which I think is fair. but it's way better than a lot of these other companies that have got like 15s and 25s and things of that nature. So if you guys are interested in that, go check them out, olaprime.com. They do have a Discord channel as well. I wanted to point that out. Just click on join Discord right here, and you can go on there because oftentimes they'll have some other Discord only promos. Okay. So just wanted to plug that real quick. But yeah, as far as the rest of the day, let's see here. Yeah, so I'm in an Aussie New Zealand. So if I'm in a currency trade, I don't really like doubling up risk, okay, on one currency. So I'm probably just going to spend the rest of the day ignoring it. But yeah, let me know what you guys think. Do you have any other assets you're looking at? I got about 10 minutes left on here with you guys. Yeah, and Nick did post the Ola Prime discount there. Yes, it is a sell, but I'll wait for something to change if I sit out the year, eh? Indices are just a churning. Yeah, just a lot of neutral signals, ladies and gents. But let's take a look at this pound Aussie. Okay, this is our second weakest. Euro Aussie's right behind us. So pound Aussie, Euro Aussie, pound Aussie. Where are you at, pound Aussie? There we go. Yeah, so on this one, guys, I've got an alert set on looks like was that a 30-minute? Yeah, 30-minute. So I kind of drew up the gap on this one here. But this is another one I'm looking at. Got a demand zone underneath I have to be aware of. But if I'm looking at some smaller time frames, guys, and remember, we don't really have a ton of news right now. So maybe you could, these are the days where I like to kind of drop down into the smaller time frames if we don't have a lot of really strong signals on the EdgeFinder. We do have obviously the Kiwi rate statement later, but a quick 15-minute in and out or a 30-minute might be a possibility. So I am looking at this supply zone on a 30 minutes as a possible retracement back to short with the expectation of buying to cover by the time we get down here. Always got to be aware of the landmines, ladies and gents. Pound CPI. Yeah, as far as the calendar, guys, CPI for the pound, like you mentioned there, and employment numbers for the Aussie. And then a big old day of PMIs on Friday. Okay, coming up, but taking a look at a couple of these. Oh, just had an alert hit. What did we have? Aussie dollar. The Aussie dollar, I do believe, is giving us a +5 score. Just had an alert hit on this. Let's go back to a 4-hour or 2-hour. Yeah, 2-hour. So here's another one I'm looking at. And as you can see, we just had the alert hit. So I'm looking at this candle here with a big ugly wick underneath. Pretty big rejection point, right? 2-hour time frame. And then followed by our gaps. Gaps up. Broke structure here. Broke structure here. Looks like it's going to be about the 50% retracement of this swing low, swing high. So by definition, what is that? It's that's diddling in the middle, right? Swing high, swing low, swing low, swing high, swing low. Okay, we're out in the middle. So as nice as that looks, I personally prefer to wait for the discounts, guys, the bigger discounts. I have a lot of trades that drop into these zones for supply zones or demand zones that do catch a bid or catch an ask and then run off into my favor. But my risk tolerance just says, hey, wait for the thirds. Wait for the bottom third. Wait for the upper third if I'm shorting, right? But, when it comes to trades like this that are in the middle, I just want to always make sure that I get a confirmation move to the upside. So break a structure to the upside or get a bullish engulfing candle. Make sure I got some volume spread analysis activity happening and building up at the bottom, at least showing that the institutions are trying to turn price around, right? So that's something I'll keep an eye on. I don't want to just be limit ordering up here, right? That's the thing. These are always confirmation entries. Anytime we're in the middle, right? Confirmation only. It's a little more advanced, but I definitely don't want a limit order. Limit orders happen at the bottom of the discount zone, right? If you're going to sleep and you're really liking if you think it's going to bounce, you're going to sleep and you don't want to miss that trade, yeah, I could see myself putting a limit order down here on this demand zone. Okay, talking about this 4 hour. But up here in the middle, no, it's got to prove itself. Drop into my zone, break this structure here, right? Retrace, find a new demand, and then that's your trigger to buy, right? That's your basic do-all confirmation entry right there, guys. Break your structure, get your demand zone bounced into right here. Let's get that over. All right, there we go. No matter what your strategy is, guys, this is something that can really help you out. Because think about it. When I have price coming down into a demand zone, what's it doing inadvertently on a lower time frame? It's giving me a counter trend price action. Right? Counter trend. Now it's a smaller time frame, and I care more about the higher time frame because the higher time frame is up. Okay. And we're getting our bullish signal from EdgeFinder, which is the most important. But smaller time frame, it's counter trend, a little more on the downside. So I've at least got to see it at least trying to, change its trajectory. So anytime you get this newly created impulse leg like this, it'll save you from a lot of nonsense, because the other alternative is you limit order and it just keeps going down. So it never broke a structure. It never tried to at least turn around, right? It's a good one. Cycling Club doesn't have the balls to trade limit orders. Well, you know what? That's fine, because we all have our own risk tolerance. I was just mainly, but think about it. If you think about it, if we got an uptrend going, okay, then again, retracements to discount zones. I don't do a whole lot of them either. I very rarely do it. But if I really like this demand zone and price is just chilling right here and I'm about to go to sleep, hey, I'll limit order that. If maybe it's going to get a 200 EMA bounce, as you see right there, 4 hour time frame. Okay, 200 EMA is going right through that demand zone. Maybe I have a anchored VWAP somewhere down here that's also going through the demand zone, right? Just stacking items in our favor. That's the whole goal of trading. It's really all trading is, calculated risk, right? Stacking odds enhancers in your favor. So if it does something like that, comes all the way to the origin of the overall strong move up, which broke structures, yeah, I'll limit order that. There's just no way in heck I'm going to be doing it out here in the middle and getting chopped to pieces. It's the retail chop zone, guys. But part of the reason I do like this, even though it is in the middle, a little bit of resistance back here. Okay, if we go back in time, resistance here, got some wicks here, got some wicks here. Just so happens it's going right through that demand zone. So, and it's a 50%, right? 50%. So that's just the way I look at it. It's the way I do it. But yeah, guys, I know Nick does have, because I'm about out of here, Nick does have his EdgeFinder discount. I think it's 40% off, 45 if you're on the stream. Definitely send them a message. Emily, you just holler at Emily or holler at either one of them. They're all good. Excellent people. Yeah, like you said, they're not robots. They're real humans. So, but get you one. Hopefully you guys were able to try it out for free last week, those of you that don't have it. That's really how I kind of got my start, was just taking that free. And that's part of the reason I'm on here, guys. I'm just a testimonial of this thing. Okay. Dropped my account into the pretty dark territory at one time, got the EdgeFinder, put myself into debt. Okay. But then I dug myself out. So it can work. It will work. And then likewise, if you're a stock trader, guys, remember there is the stock box as well. Now, full transparency for you guys, I still don't know what all this stuff means up here. But the cool thing is I can utilize it for the signal and just verify with my technicals that, if I want to get to those trades. Along the way, my plan is just to study up what all these different items mean. Okay, all the financial readings. The reason to get into the trade, right? Remember, fundamental analysis is the reason to get into a trade. The sentiment is the verification from the relationship of smart money to dumb money. And then the technical analysis, the charts, is just a simple mechanism to time the entry, right? The most important thing is not talked about enough. Stick around Trader Nick and Company. You'll hear all about fundamental analysis. But you go to most of these other live streams out there, or not to mention all the trade videos that you can find ad nauseum on YouTube, all they're talking about is what they claim to be the sexy part of trading, and that's the charts. But remember, in our opinion, I think I can safely speak for Nick, the technicals, the charts is the least important thing in trading. Okay. Fundamental, sentiment, technicals, and all in that order. And ladies and gents, I think I'm going to go ahead and hop up out of here because I have reached the end. So with that, have a great day. I do believe we have Alan coming up next. So with that, take care. Have a good one, guys.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. What a fantastic day. The markets are now open fully. As we know, yesterday was a holiday in the US, so we did see less volatility than usual. But now the currency pairs are moving, which is my realm. This is my playground here, currencies. You can see here in the green with the pound dollar at the very, very bottom of this relative strength chart here. And looking at from a technical perspective here, pound dollar is actually at a cool level of support here, right along that 50-day moving average as well. The reason for the fall here in the pound dollar was some employment figures here, the main one being the unemployment rate in the UK. So you can see here it ticked up to 5.2% there. And so that was the reason behind the overall fall in the pound here. And usually the dollar now is starting to get a little bit of a bid here, bouncing off of that level of support. This next level of resistance where I think the dollar can stall out here and then present an opportunity for bears to go ahead and fade it will be this 98 handle here. But yeah, I covered the two charts here, the Canadian dollar CAD and the pound dollar here in the Telegram channel. So as the advertisement just said here before I came on, go ahead and join the Telegram channel. Free value, of course. I break down the two best charts of the day. And if you look into that and you do it every single day, I promise you that you will be better at fundamentals. So let's go ahead and look at the two positions that I have at the moment here. Euro dollar short is one of them, and you also have dollar CAD long here. So euro dollar short looking out pretty well here. I'm going to look to repivot and reevaluate once we get to this 1.7500 level here, the support zone here, along with that 50-day moving average, or dollar CAD here as well, starting to pick up as well. You are seeing the dollar overall catch a bit, but you are seeing the Canadian dollar have a little bit of a fall here as well. Reason being, the Canadian economy also saw some data today. We had CPI come in lower at 2.3% versus 2.4. So that's obviously weak for the Canadian dollar. So we're seeing a little bit of a pickup there. You also have some overall themes like the US versus Iran situation there. We did see a headline. I know I keep going back and forth. Sorry. With Iran's prime minister. It says something's going on over there, development. They have some their agreements on the values. For some reason, this is not loading up here on my screen. Let me refresh. Should be some. Oh, there it is. Iran's foreign minister here. We reached an understanding with the main principles with the U.S. So that's obviously helping, reprice some of that risk premium that was in oil there. Oil also too, interesting chart. Right up on that 200-day moving average and what I think could be a level of support here for oil. So if you see a break below the 200-day and this level of support, perhaps we can go ahead and see this thing kind of chug lower here back to these recent, prices. I think the catalyst that would drive that would have to be some kind of a resolution. Until then, I do think oil stays somewhat elevated. So unless you see more of a solidified agreement between the two, then I see that oil can go ahead and fall down. Same thing with the metals as well. We saw overnight here. Metals were kind of falling over. Same thing. They're in the range here. I think the catalyst that would drive them lower would be that resolution. So you see gold here kind of, fading lower here very slightly. Well, not slightly, but 2%. But when you can consider the recent price action, this is slightly. Silver as well here, relative weakness. kind of go ahead and fading down there. So as far as data coming up for the week ahead, Forex is looking to pick up here. So glad to see my 2 trades doing well. You do have more data for the UK tomorrow, right? So you have UK CPI, which is expected to come in lower than expected. So if we do see that trend continuing lower for the UK, that you can probably see that 50-day moving average on the pound dollar go ahead and fall. And then we can probably see a break below this level here. But until then, obviously, we have to wait for the data to see if that goes ahead and continue. One thing that's really interesting, though, and I'm going to highlight this new page here. So this is a newer page, the Forex scorecard. I would highly recommend every EdgeFinder user to go ahead and use it for currency pairs. Before we were using the data scanner, but I like this one. It's a lot more sleek, modern, and pretty cool. It's consolidated, so I love it a lot. So I would definitely recommend check this page out here. But you see that the pound dollar is getting a bearish reading. And if you look at the top setups page here, when you're considering, we're excluding the minor pairs, just looking at the major pairs and everything else, the pound dollar is actually getting the weakest reading as far as everyone else, as far as the major currency. So that's interesting to see as well. For a lot of reasons, obviously the macro that we saw this morning with the unemployment rate, potentially the CPI tomorrow could add more fuel to that. But if you look at the COT data as well, we saw that it was the second or the third to lowest weakest reading here, 2.96% as far as COT data. So interesting to see there on the pound. Looking good, right? This was one of the pairs that a lot of us had in the back of our minds was euro dollar, pound dollar, but pound dollar is the weaker one of the two. So it's good to see that things are starting to play out here as far as Forex goes. And then as far as setups and trade management goes for my positions, euro dollar here, looking to go ahead and repivot or reevaluate once we get to this level. If you start to see something like the pound dollar really start to lose some steam or like to continue falling really fast, then most likely than not, you'll see that across most of the FX majors. And so we'll probably see euro dollar head into this territory. Then perhaps I can consider go ahead and moving this a little bit lower here. But until then, I'm not going to do anything like that. I'll just go ahead and trail my stops as we continue lower. Same thing with dollar CAD as well. We'll see if you continue to see those positive narratives as far as the war, like US versus Iran, and we'll go ahead and reevaluate the profit target. But right now, I'm targeting this 3.900 level here, 1.3900 on dollar CAD, which is about 300 pip take profit, which is good for me. I think if we get to this level here, you have a strong case for the dollar getting pretty bid up there, and then you have to start pricing in the next rate cuts there. So we'll see how the fundamental landscape looks like at that time. But for now, pretty happy with the 2 trades here. I'm not looking to put anything new on. So I know markets are moving and stuff like that, but I'm pretty happy with my entries on the 2. So I'll just manage them correctly. Eventually, I will move these stops into like break-even territory or just trail them with structure. But for now, I'm going to just let them breathe and do their thing. But not looking to put anything on. We are seeing some movement in dollar Swiss here as well. This one was getting super, super weak here as far as, dollar base rate. Starting to pick up, but still relatively weak compared to the other ones here. You still have a huge risk to the downside if you see an escalation as far as risk off, right? So Swiss franc, safe haven currency. If you were to see something pop off, then this thing will continue falling. So I'm not looking to buy into this level of what could be resistance, this 7,900 level, something I've had my eyes on for a while. So if we do somehow get up into this level, I'll be looking to short this for the long term, or to continue with the Fed easing, narrative. But I don't want to buy into that, right? Because last time we could have bought into that level, but then obviously we never got there. So if I go ahead and zoom into this just a little bit here, we were getting pretty close there, and then we started to fade off slightly there. So not looking to do the same. I'm going to be patient on dollar Swiss. I already have positions long dollar, so I don't want to be too correlated in that direction anyway. I'm pretty happy with how things are going. So I'm just going to be patient here. If anything, I go ahead and put an alert, something like this for dollar Swiss. It'll be pretty nice there too, technically speaking. If we do make our way up there, you have the 50-day and the 200-day moving average going to be somewhere around that area. So that's going to be a positive. That's going to be like one of those A+ setups if we do, if it does present itself. Yeah, man, that Forex scanner page, I know it was really hard to do so, and I'm curious to see or to learn how you did that on the back end, because the thing with currencies, like the asset scorecard page, fantastic page, super clean, super slick. I love it. But the thing with the currencies, guys, is like you're trading 2 things at a time, so you have to display 2 data sets, right? For example, the euro versus the dollar. So I love how the Forex scorecard is actually super consolidated, nice and sleek. So I'll definitely be putting this more in the chart markups too. I like this, how this looks here. This looks very, very modern, very chic, as some people say. That looks like a double top here, hence a sheer liquidity zone, manipulation, limitation, as I like to call it. Not sure which chart you're referencing there, headliners, but yeah, if you go ahead and put that in the chat, I can go ahead and take a look at it. We do have another exciting update coming on the asset scorecard. We'll be adding the major currencies individually to that page. For example, you will be able to isolate. Yeah, that'd be sick, man. That'd be sick if you could just like toggle one of the two, right? And then have like a you can toggle the two, and then you can have like a option to have like a very condensed version of the two, like this right here. Basically this. Yeah, that'd be sick. So many updates coming to the EdgeFinder. One of the cool things about the tool, guys, like it's relatively competitively priced for what it does. It does the job fantastic. Also, you have the sale at the moment too, which is what, 45% off. So go ahead and snack that. Especially if you were on the free trial and you enjoyed it, go ahead and participate in the promotion there. But also you get tons of free updates. And the cool thing is, we were all talking about Emily, and we also have other people behind the scenes like Drew, James, Nick, software developers there in the background that are super invested in the mission, and they are continuously giving you updates. So you pay the one-time fee, but you're always going to get new updates, right? So this is awesome. I love it. So go ahead and get yourself a copy of the EdgeFinder. Yeah, can't wait for that, Nick. Me too, man. Trade like a tiger. So yeah, let's go ahead and look at some other currency pairs here that are moving. You do have New Zealand. I believe it's the cash rate and the rate statement that they got going on there as well. So let's go ahead and verify that. Yeah, New Zealand cash rate and the rate statement. That'll go ahead and give us the forward-looking guidance as to what the RBNZ is looking to do with interest rates. They are expected to hold, which is, most analysts, they're pretty right on this here. But I think most eyes are going to be on the rate statement to see if there's any division, if there's anything like that, or if people were in line with what they did. So we'll go ahead and look at that for the Kiwi dollar here. From a technical perspective on the Kiwi, you do have this level of resistance that we go ahead and tapped into there. So this right here, we tapped into it previously, June 30th till 2025, right? We tapped into that. We kind of faded off here, and we've kind of seen the similar price action so far developed. Obviously, this can change if the RBNZ takes a hawkish stance similar to the Aussie dollar, so an aggressive hawkish stance like them, then you might see this thing catch a little bit of a bit there. As far as Aussie dollar as well, you are seeing the same kind of price action here, tapping into a resistance level, what could be a resistance level here on the weekly time frame as well. So maybe we get a pullback opportunity. So although I am short-term dollar bearish, I'm looking to exit the positions if we were to get to that $98 level of what could be resistance here on the dollar. If so, I'll look to go ahead and repivot short the dollar as long as the fundamentals make sense. One of the ways I'm looking to do that would be via the Aussie dollar. I still like the trade here, but we are overextended. I'm going to be waiting for a pullback somewhere up until this level here. I think this level is a solid level to go ahead and take a stab at it. I think the policy divergence between the Aussie and the US is still very, very strong there. So I'm looking to participate if we get there. I have that alert there at the 69,500 level. But yeah, I pull back into this level here would be good grounds to go ahead and go long the Aussie dollar. Even if we go ahead and just like target this range here, this upper end of the range, that's still, let's measure this move out here. That's still about 200 pips, right? So I'm looking to capture 200 pips of upside, even if we just stay range bound, which is pretty good. Yeah, go ahead and do the 45% off sale there. Also, too, one thing I will say, go ahead and join that Telegram channel. I'm going to put the link here. I know we talked about it earlier in the stream, but please, I invite you to join the Telegram channel every single day. We do chart markups, bonus content. You also have coupons to other prop firms if that's your alley, right? So you have DNA funded. Sometimes you put Ola Prime in there. All of the latest discounts, get some free value there. We always post them on the Telegram channel, as well as at the end of every single day. We go ahead and put a quiz there to go ahead and keep you guys very, very nice and sharp. So free value. I love the Telegram channel. I honestly think we have the best Telegram channel in all of the trading space. Seriously, I really believe that. So, and I love doing it. So go ahead and join. I promise you will find some value from that. We got Marco here behind the scenes. Marco, how you doing, man?
Hello. Let me just share my screen, or I think it's shared already. Let me check. Just a second.
How's your day been so
Yeah,
far?
should be fine. Doing pretty well. I've been doing some research, a bit of reading, and I noticed that the tax refunds are supposed to come this week and the next week. Have you looked into that?
Like everyone's tax refunds as far as like their taxes?
Yeah, so what I noticed is, I have it in my email. An important question over the next 4 weeks is whether larger than usual tax refunds will find their way into crypto or the stock market. The big beautiful bill lowered tax rates in 2025, but the IRS didn't change the withholding. Therefore, US taxpayers are about to receive 60 billion to 100 billion in tax refunds. So that's a huge amount of money. It's gonna hit, I think, by the end of February. And the question is then, will the public use all of that money to put it into stocks, or will they use it for something else? Because stocks are not doing well at the moment, so they may just go ahead and put it into, let's say, savings, or just buy something. So we shall see what happens. I think this is a very crucial point especially for the Nasdaq.
So it'll be interesting.
Price action is pretty bad.
It'd be interesting to see how it plays out. I know the tax refunds, it varies for a lot of people as far as when it's distributed. It doesn't come out like all at once to everybody. It really depends, honestly, on when people file their taxes, the turnaround time for the IRS actually giving out the funds and stuff like that. But yeah, that's interesting to see. I know usually, right, tax season is when people have a lot of free cash on hand, and they're looking to do something with it, whether they want to spend it all, pay off some debt, or participate in the market. So yeah, that's an interesting thing to see if it plays out there. How are your trades going, man? I know your buy Japan seems like that's working out phenomenal there for you. So awesome to see that. Are you looking to put anything new on, or are you kind of just sticking with what you got?
Yeah, so in the last few days, the Japan narrative has been a bit flat, I have to say. So still in profit on the Nikkei, although it's starting to just range around at this level. And Euro Yen is being a bit stubborn, where it keeps on dropping and then retracing, basically just being flat and a bit range bound. But I'm staying on with the buy Japan narrative. I do think it's going to continue. I do think the fundamental reasons are still present in the markets. Other than that, I'm of course looking at gold. Gold down today and actually broke the 20 MA. I did make a post about it in the A1 Discord and I think I mentioned it yesterday. Essentially, we have the Chinese New Year. China is a huge buyer of gold. So essentially, China is offline. There's less buyers. Price is expected to drop a bit. That is maybe what we're seeing at the moment. And I would be waiting for first the Chinese New Year to pass, and then for the EdgeFinder to, of course, sprint bullish. I know we were bullish last week, but it was a Friday, and I didn't want to take a setup on Friday. So good thing that I stayed out. Of gold. I do like the Aussie dollar, which I think you like as well, if I heard you correctly. Just around the 20 MA. Is that sort of the entry you're looking at? Around, let's say, 0.698?
Yeah, 698, 695, somewhere around that area. Yeah, I think it's good. So I'm just kind of seeing, how far this dollar bullishness kind of plays out and see how far it goes. Ideally, I would love to wait for a pullback back into this level of what I think is a good support zone here. 695. This is a pretty thick range here. So if you measure this out, it's about a 90 pip range. And that's kind of my process with Forex is like, I'm not looking to sniper an entry or anything like that. I just want a good level to go ahead and participate along with strong fundamentals behind it. And I still think the policy divergence between the Aussie and the US is pretty strong there. So I'm right there with you, man. Looking to get a pullback, whether it be the 20-day moving average or maybe a little bit lower, just to kind of see when this dollar bullishness starts to stall out there. But to your point on gold there, I mean, I agree with you. A very smart choice not participating on Friday, because that would suck. But we are kind of still within this range here, this choppy zone here that I think is a good zone, the 4,700 all the way to the 5,100 here. We're kind of just hanging out in the middle of there. So as far as participating now, I know a lot of people may have questions on that, like buy gold, sell gold. What do I do? If you're not in it, just wait, because you're kind of in the middle of this ugly zone. I would wait for either something here or here, right? Whether it be a break and retest above 5,100 if you get positive fundamentals behind gold, or just being patient and waiting for some discounted zones. I like the analogy that Tiger said. You should approach this like buying a car, right, or a used car.
Okay.
You want to buy it at a discount and sell it at a premium if you can. So definitely want to do with those principles and wait for gold to get a little bit lower here. Silver, is that something you're watching? I mean, this thing looks like an ugly chart. Just comparing gold versus silver, the relative weakness in silver. I think from our previous conversations, though, you're not touching silver, right?
Yeah, just below the 20 MA on the daily price action, not the greatest. So gold is my favorite. Let me put up silver. Yeah, silver just looks pretty bearish, pretty bad to me. Gold right now, I don't like that we broke the 20 MA. And I don't like this candle. But again, it may just be that China is offline, so the buying hasn't been massive. Overall, if you do zoom out, the trend is still untouched. So I would try to take a stab at it. Once the Chinese New Year passes, once the EdgeFinder prints bullish, I think this is a pretty good play to buy still. And we're red on the day, so my watch list is mostly in the red as far as I can see. What do you think of that? Of the stock selling off?
We're kind of just hanging out here, nothing really too crazy. I know there's a lot of concern about certain sectors in the market being disrupted by AI here. I think a pullback of any kind is healthy, right? I think this year we'll probably see a little bit of pain before we see gain here. I do think that the year ends up slightly positive. But with that, a lot of the times when you have a strong outcome in the stock market, first comes a little bit of pain behind it. So I'm open for some more selling here. I mean, anyone would, right? If you have a long-term horizon with equities, especially, anything in a discount is really, really well. So zones that I have this 6,500 here on the S&P 500. On the NASDAQ, something like 22,000. I know that looks scary there, but if you just measure the move out here, that's about a 9% drop. So I think it's still pretty well. So if you see these levels of support kind of start to flop here, we've seen that it's reacted strongly in the past, like once, twice, 3 times here. So I think if we get a breach of these zones, then you do have open room to fall a little bit more. But I do ultimately think that stocks will get picked up a little bit. And the way I would play that out is by just looking at our sentiment plays, put to call ratio. Fantastic tool. You can see it on the EdgeFinder as well whenever that does happen, to see extreme prices or extreme activity in the options market. But I'm open to a drop, man.
Yep. I would actually like to see a drop so that I can buy it cheap, so that we can get in on a better price. And again, it's all about the volatility. Doesn't matter if the markets are moving up or down. Both options are great. The worst option for a trader is markets being flat.
Right.
That's kind of also the most boring thing you can get, because then no one makes money in a flat market. So
I agree.
And also you have the AI situation that you mentioned, with basically the NAS and the AI story, and maybe people looking at this and saying, are the firms spending too much? So too much capex spending. I think even Google. So I was looking to buy Google last week, but fortunately I didn't. I just couldn't get the confidence to buy, and now it's just dropping.
Yeah,
so
look at that.
every single. Yeah, sorry.
No, I agree. Yeah, I just put up the chart here as well, and you're right. It is dropping a little bit. I know Google is, like, as far as when you think of the AI race, Google is kind of on the forefront of that. Do you have a specific zone that you're looking at for Google following this drop here, or are you just looking to like DCA long term on an asset like Google?
Well, Google I did like because it's the clear winner of the artificial intelligence race at the moment, at least. Would I look for any specific levels to just go in and buy? I don't think so. I
Okay.
probably would like to see better price action. So if we continue to sell off and then start going higher and start respecting the 20 MA, I think at that point I could start to get interested. But as far as any specific levels where I'm just gonna buy, that's not really something I'm considering. I would have more confidence maybe on the NAS. If NAS drops to, I don't know, 2200 as you mentioned, that could be a pretty nice level of support, because that is the Trump tariff scare right here. So that could be interesting. But as far as individual stocks go, I'm gonna have to think about it. Think about
Okay.
how the situation is developing, and think of the whole sector as well. What about you?
No, I would like you go ahead and prefer, if I'm actively trading, choose a vehicle
Yeah,
like the Nasdaq.
yeah.
And I'm long term investing, of course, really the price doesn't really matter if it's like a long term time horizon. Obviously, you do want to get a good price here. So for Google, if I'm just looking at this with a fresh pair of eyes and I want to go ahead and participate on any discounts, let's see, anything at 240, if we were to get there, 240, 250.
Okay.
I think is a good level here, which if you measure this out, that's a 20% drop. So we would need to see something kind of weird for a 20% drop in Google. But ultimately, I like your approach as far as like taking the safer route, being somewhat diversified. Still want to play the Google trade via an index where you have exposure to more of them. I like that idea as well. So for Nasdaq, are you looking at you said 22,000 level or 24,000 level?
22K. I think we could hit it. I think we could pull back to those levels. And question for you. So if you had to pick 5 US stocks that you want to buy for the next 1 to 2 years, what would you pick?
Oh man. Okay, stocks. I don't know about stocks. I would pick sectors.
Okay.
I would pick defense, like military. I would
Okay.
pick something like something related to housing and financials. So that I would do that as two. I was talking to someone as well earlier, and I was basically saying like they were asking like what's hot, what's not. And I was like, well, the safer bet would to play the sectors and be somewhat broader, especially if your time horizon is a little bit longer.
Mhm.
I think we all have the same view here, but I do think that these smaller cap companies that are more sensitive to interest rates will play some kind of a catch up trade. And they're doing pretty well right now. If you just look at it, like you have the Dow at 50,000 and the Russell here too, pretty up there. I
Yeah.
would really try to go for those companies that are within those, interest rate sensitive, especially if we continue to see rates starting to fall a little bit there. I do think that they can start to thrive off, and you get somewhat of a broader market rally, a more healthier environment. But individual stocks, I mean, I love Google. When you think AI, you want to have some of that exposure.
Yeah.
Defense would be another. I love, like I said, like the financial stuff like that, interest rate stuff. Also to quantum. I don't know if you're into this. I know this is more of a speculative play there, but quantum would be a good one. And then the last one would be
Okay.
precious metals, some exposure to precious metals. That would be a solid, I would think, a portfolio.
Quantum, is that a company dealing in quantum computing or?
Just like a quantum ETF that's tracking multiple companies.
Okay. But it
But
has
yes,
to do
quantum
with
computer.
quantum computing. Cool.
Mhm.
Yeah, I did some research over the weekend on quantum computing, and like if you really dig into it, it could really transform everything that we know today about computers. Like just the speed of it, and it can actually probably crack Bitcoin as well. I mean, it could be in some trouble. So,
It's
but
essentially like something like the infrastructure to support the future, right? Here in Chicago, there's like a very very old, humongous like it was a retired like uh some kind of a mine or some kind of it's just like humongous lot, commercial lot here, and
okay.
they're investing like billions of dollars to turn that into a quantum um computing, like whatever, like a
Mhm.
warehouse or whatever, where they have everything there. So
Yeah.
it's more down the road, but I do think, like you said, if you get that up and running and you get the infrastructure right for it, it can definitely accelerate the future, the AI, all that good stuff.
Yeah, and I think because to make quantum computers, you need extremely cold conditions. So probably they want to put it in a mine or somewhere where they can actually control the temperature, completely chill the whole place. So that's interesting that you mentioned it. But that's a great sector. I totally forgot about it. The quantum sector. I think that could be an awesome play for the long term. And also one more thing I would add, I would pretty much do the same thing as you. What I would add is maybe buying the beaten down companies that are getting punished for the AI stories. So currently AI is going to take over a bunch of jobs. So a lot of technology companies are getting sold just because everyone believes that they will cease to exist once AI goes completely mainstream. But that's not the case. From my research, mostly the service sector will get crushed. So for example, there are companies that hire 100,000 Indian engineers, let's say, or computer specialists, and then Americans hire that company. I think it's Infosys. Let me try to see. I think it's Infosys. Not sure, but I think this is it. Essentially, so Indian company hires 100,000 PC specialists or whatever, and then a US company hires those specialists to perform very simple, kind of easy tasks, which could be easily replaced with artificial intelligence. So companies that provide such a service, like Infosys, I believe, will get crushed. But other companies like Cloudflare, for example, Cloudflare, I'm not sure of the ticker. I think this is it. Cloudflare will do well, even with artificial intelligence, because you always need security. So even artificial intelligence needs security. It needs to be put under control. And I think Cloudflare specializes in security. So if you can determine which companies are doing services and which companies are doing, let's say, cybersecurity, you can buy the beaten down cybersecurity companies and do pretty well.
You just reminded me too. That's such a no-brainer, industry, cybersecurity, that I would definitely go ahead and put. One thing I would put cherry on top into the portfolio. I had a sixth one, a YOLO stock here, Beyond Meat. Super high upside if something does come out of here. But Beyond Meat, I would put a couple $1,000s in that and just hope for the best for early retirement. But
what is this company? Are those the fake hamburgers?
Yeah.
Okay, cool.
Oh man, but Marco, I know you have your solo segment here shortly. Do you have a giveaway to do?
Yeah, I do.
Okay,
yeah.
Awesome, man. Well, I will leave you to it. We will see you tomorrow, I believe. I love these collaborative talks that we have all the time. So I'll be looking forward to the next one, man. And everyone, join the Telegram channel and follow Marco on his socials. Awesome stuff that he has on the content side. But we see you tomorrow, man.
Yeah, see you tomorrow. And this was great. Really had fun. So goodbye.
As always, bye-bye.
Bye. So time for the solo segment, but before we do the solo segment, I do have a form for you guys to fill out. Let me grab it. Form. If you want to get entered into a DNA Fund Challenge giveaway and get a free, let me see, what do we have for today? Just a second. Get a free 5K one-phase account. Okay, click the link in the comments, fill out the form, and then your name will get entered into the Wheel of Names. Wheel of Names, I'm just gonna clear it for today. Clear, and then we're gonna spin in around 10 to 15 minutes. Okay, that is the general game plan. By the way, if you wanna get funded with DNA Funded, if you want to increase your capital, this is my personal account right here. So if you want to increase your capital, you can use the code A1Live, which gets you 25% off any DNA Funded challenge. So A1Live, use the code. This is my 25K two-phase account, still in phase one. Current equity is around K and I need 27.5. So I need 27.5 to hit the profit target. Current trade open is a sell on gold running in some pretty decent profit. And this challenge is purely traded by ChatGPT signals, which I'm doing a challenge on my YouTube channel using only ChatGPT to trade prop firms. So far, the performance has been past phase 1 of a 50K, past phase 2 of a 50K, blew the funded stage without the payout, and now I'm on to a new challenge. So you may be asking, will I just continue doing these challenges indefinitely? Well, the game plan is that if I spend, let's say I invest 1,000 USD into challenges, maybe in payouts I can get 2,500. So it's not just about one account. It's very likely you will actually blow your first, second, maybe even third account, but it's about a big sample size. So my best advice is do proper risk management, of course. So I would risk 1% per position, maybe a bit more. But essentially, don't feel bad if you blow your first account. So if you're looking to buy a 100K challenge, I would much rather split that into 4 25K. So 4 times 25K. That means you have 4 chances to blow some accounts and to get some payouts. So this makes much more sense to me. Instead of buying a 100K account, buy 4 25K accounts and then go one by one. You can even risk a bit more if you have 4 25K accounts. And then at the end of the day, the goal is to invest, let's say, $500 to $1,000 in challenges and to get at least a 2-to-1 payout. 2.5 to 1 would be even better. That's the name of the game. Okay. Let me see what we have for today. Entries have not been reset from last week. Yeah, I don't think that the entries have been reset yet. They should be reset, I think, after this week. Gonna have to check that. On the watch list, I have the Nikkei in a position. I recently trailed the stop loss. Stop loss is currently at 54883, so locked in some more profit. My main goal is to let this trade breathe, so I don't want to squeeze it too hard. I don't want to put the stop loss too close to the current price, but also I don't want to leave a lot of profit on the table. It's a balance. It's definitely a balance, and it's a bit tough to do, but you have to make a decision and you have to stick to it. So putting the stop loss just below that 20 MA, if I get taken out, I will try to re-enter. I will try to wait for another bullish reading on the EdgeFinder. And I'll most likely try to re-enter because I do really like the story in Japan. I do think money is going to start, and it already has started, and will continue to flow into Japan. So that's why I think this is pretty good. Euro-yen is sort of back at break even. We just can't seem to push lower. With the US equities being in the red, we should start to see some more money flow into the yen. Usually that's how it goes, but it's not a rule. It's not a rule, so you never know what's going to happen. You just have probabilities. Aussie dollar going lower. The dollar is catching a bid. DXY up on the day, approaching my entry level, approaching the 20 MA. So that's nice. I may try to take a stab at it. Bullish reading on the EdgeFinder as well. The best thing about it is if you go to central bank rate probability, you look at the Fed. They're planning to cut rates. So by the end of 2026, look at December, 3%, current rate is 3.63. Then you go to RBA and you go to 26, 4.16, current rate 3.85. So that's hawkish. They're looking to hike interest rates. And that's why I think Aussie dollar is a great play. Gold down on the day, broke the 20 MA, pushing lower. Yeah, not sure at the moment. I mean, this is the exact reason why I waited to enter. So if you are in the A1 trading Discord, you would know that I was concerned about the Chinese New Year and the lack of demand, or kind of the quietness of demand. So that's definitely an issue. If you're not in the A1 Discord, you can consider joining it by clicking the link in the description of the stream, and you can use the code Marco to get 25% off. So code Marco, 25% off. You can get all of my positions, all of my trades, all of my knowledge, basically, because I do make regular posts in my journal. So this was one of them. Gold, Chinese New Year, demand goes down. Not the best time to be buying gold, especially since we came off of a correction. If the market conditions were a bit different, if we were still in a massive uptrend like this, then it's a different story. Then maybe gold goes up even during the new year. But since we came off of the all-time highs, since we came off so rapidly, yeah. So being patient. Let's see. Neutral reading at the moment. Getting a closer read. Yeah. Let's see, asset scorecard. Let's see. Let's see how this works out. The trend is now negative. That mostly has to do with us crossing the 20 MA and some other statistics as well. But you know, the technicals on the daily chart definitely are starting to look kind of flat and bearish. In terms of news, I don't think we're getting much this week. Let me see for the USD. Core PC, manufacturing services PMIs. Next week, not PPI. Okay, inflation print. Joel's job openings, then that's in March, and NFP. Yeah, not really a lot of news. If you're wondering this week what I'm focusing on, I'm mostly focusing on the RBNZ. So that's kind of the most important event for this week, to see what the RBNZ will do. As far as the New Zealand dollar goes, if I reset this and we go to, let's go to remove neutral. New Zealand, we have the Aussie NZD, which is bullish. I don't want to touch that because I do think that the RBNZ will be a bit more hawkish. Pound Aussie, I do like. Do we have anything? Euro New Zealand bearish reading right there. Euro New Zealand. Let's take a look. ZD. Okay, nice downtrend, looks fine. NZD-JPY is something I also don't want to touch. Maybe some of you had a question on that. So NZD-JPY, I think both the New Zealand dollar and the yen are kind of strong at the moment. If I had to list all of the currencies, we can go to heat maps. So we can go to heat maps, and US, a bit bullish at the moment. EU, in my opinion, bearish. I'm not talking about just the fundamental numbers. I'm talking about the whole environment. UK, bearish. Yen, bullish. Canada, not sure. Haven't done much work on Canada. Aussie, bullish. New Zealand, bullish. CHF, not sure. And China, bearish, if I'm being honest. I think the Chinese yuan is going to lose value in 2026. I can't really trade it because on my broker, the swaps for trading the Chinese yuan are massive. So, by the way, I'm going to post the form once again. So you have some more time to fill it out. Okay. Form is in the description. Fill it out if you want to get entered into the giveaway. So NZD-JPY, not my favorite thing. Let's see. GP NZD looks similar to the pound Aussie. I am bearish on this pair, but I do prefer the pound Aussie. I think the Aussie is a bit more bullish than the New Zealand dollar, so I'm looking to sell pound Aussie on pullbacks to the 20 MA. You know, we're getting a bit of a pullback here, but it's not enough. I would like to see a bit of a bigger pullback. I think that is about it for the form. Let's go to the names. Today is the 17th. Okay, let me copy all of the names. Copy. Okay, we have one more there. Just a second. A new one popped up. Copy. Here, wheel. Spin. Let's see. Arhis, Joseph, or Arhis? Arhis. So Arhis A, congrats on being the winner. After my segment, I'm going to send you an email with the code for the free. It's a 5K one-phase DNA funded challenge. So you can wait for an email after, or you can expect an email after my segment. If you didn't win and you want to get funded, just a reminder, you can use the code A1Live. That gets you 25% off any DNA funded challenge. So check it out. Great prop firm. I've had a great experience so far. And with our discount code, you get a great price. You get a great price as well. Just check the equity. 35,977. I have some trades that closed. Let me see. Next page. Next page. Today is the 17th. I'm getting lost in the dates. Let me see. Equity filter for 4 hour grew a bit, but not much. Anyway, back to the charts. Sluggy, hello, welcome. Ball out, welcome. You expecting hawkish or dovish RBNZ? That's a good question. So unfortunately, there's no RBNZ here on this website. There's only RBA. But if you take a look, they are scheduled to leave the rate the same. I personally believe they're going to leave the rate the same, but that they will have some hawkish forward guidance. Because the RBNZ kind of tends to follow the RBA, and RBNZ has mentioned possible higher rates in 2026. So I think a bit more hawkish. I think NZD is one of the stronger currencies in 2026, but I also think the Aussie is even stronger. So I would rather play the Aussie than the New Zealand dollar at the moment. That's my pick. I'm trading Walmart 1 hour. Walmart. Is this the right stock? This is the right one. Walmart looks amazing. So that's pretty interesting to see. Retail doing nicely, especially with the technology sector getting crushed. So retail looks pretty healthy in this environment. Would I be happy to get in? Well, I personally wouldn't, because I don't have a lot of capital to deploy on individual stocks, because I trade mostly Forex on my broker. And as far as prop firms go, there's very little individual stocks. So I tend to just look at the indices. And indices right now getting crushed. Faked everyone out, including you. Well, everyone in my Discord caught buys because it happens every FOMC. Sell the rumor, buy the news, just like I told you. Not sure what you mean. Euro Aussie. Ah, you're talking with ball out. Okay. I'm getting in on the wrong conversation. Euro Aussie, bearish. In my opinion, bearish. Bearish technicals, bearish fundamentals. If I go to the top setups, Euro Aus, bearish reading right there, -6. Yeah, not bad. Not a bad play. I like the pound Aussie more if you want to sell something, but Euro Aussie, not a bad play. No worries, Raging Fire. So looks like Raging Fire is the winner. Congrats. Let me see if we have any more comments with requests. Okay, we have people fighting. Euro dollar. Euro dollar. Euro dollar. Bearish. Bearish, in my opinion. Some strength is going into the dollar. Some strength is going into the DXY. I know Alan is short on euro dollar. I think he has a trade open on it. There's been sort of a blow off top right here, and that was the exact moment when Trump announced Warsh as the contender for the next Fed chairman. So euro dollar bearish up to the support level, maybe. So maybe we can be bearish to the support level. I think that would work out fine. Do I want to place a position on it? No, not personally. Not a bad position because we do have this resistance level. So you're basically selling right at resistance, which is fine. And you're betting maybe for a price to hit the low of the range. EdgeFinder to check. I think it's a neutral score. Yeah. Neutral score, but the -4. Pretty close to being a bearish score. You know what? This is not bad. This is really not bad. It is actually pretty interesting. USD CAD. I know Alan is looking to buy it, or he has already bought it. USD CAD looking nice right here at this support level. USD CAD. Neutral reading, not bad. We also brought up the COT history on the CAD, which got really crowded. So the COTs were buying the CAD like crazy, going from, what is this, 9.74% long to 54.2% long. That is pretty large. Let's see if we go back months. Can we go back 36 months? Yeah, we can. What about a bit more? What about 50? I don't think we can. Anyway, you can see that from 2023, March 2023, they have never been above 41.4. So now they're above 54.2, which is pretty high. That's pretty high. Okay. And just massively buying the CAD, that was probably where this move happened. See? So interesting situation to follow. RBNZ, yeah, I went through it. I'm personally hawkish, but I'm not willing to place a position right before the event. I don't have a good enough edge. Euro Swiss, I'm short dollar CAD. Well, I'm personally bullish on dollar CAD. I'm not in a position, but if I had to pick, I would be bullish. I think money is starting to flow back into the dollar. So you need to be really careful with what you're pairing the dollar with. You know, we are right at this support level, right there. Okay, right at the support level. So essentially, range bound could be the case, but before we go range bound, we can appreciate. And I'm looking at the situation. I'm looking at what is happening. I'm doing some reading, and seems like the dollar is starting to catch a bid. Just be careful. Just be careful. Marco, what is the effect of US and Iran making a deal on euro? Because it feels like euro has strengthened since the news of an agreement hit. I'm guessing it has something to do with oil. Agreement hit? Did I miss something? Breaking news. Market moving. Missed it. 1450. Yeah, sorry, I missed this. Iran foreign minister, we've reached an understanding on main principles with the US. That's why gold is selling off. Okay, fine. Initial reaction on the euro. We can try to take a look, not really at the euro dollar, but we can do euro yen, maybe. Bit of euro yen. Yep. Catching a bit of a bid. Because yen is a safe haven, euro is a bit of a risk-on currency. I personally think it could be a bit bullish for the euro. Yes, I think it could be a bit bullish. And you're right in saying that the euro has strengthened since the news of an agreement hit. Not sure if it has to do anything with oil. Let us just check the oil prices. Oil prices going lower. That is because, of course, an agreement has been made. So that means a risk-off environment, or sorry, a risk-on environment. We were in risk-off environment. You get gold goes up, oil goes up, silver goes up, yen goes up, Swiss also goes up. So the Swiss franc tends to be risk-off. Risk-on. Usually dollar goes up. The dollar actually goes up in risk off as well, depending on the environment. So depending on what's happening in the world, it's kind of tough. It sometimes goes up, sometimes goes down. But the euro in risk on should go up. In risk off, it should lose some value. That's how things should work in theory. So that's a good observation, and thank you for bringing this up because I totally missed this latest news, and it was pretty recent. So it happened, 2 hours ago? Also, we had the UK unemployment change, which was pretty nice for the UK, and the CPI, that was from last week. Interesting news. Not sure why the stock market is not loving this. Stock market tends to go up when there is less conflict. Stock market tends to go down when there is risk off, when there's more conflict. So this, but is it an agreement? I mean, it says we've reached an understanding. That's not a confirmed agreement. That's not written. So this doesn't really give full-on clarity. Yes, it improves the situation. It moves us into risk on. And if the agreement is actually made, if it's a signed agreement, maybe it is, maybe I'm missing something, but as far as I can tell, it's still just talking. It's still just mostly talking. But gold is selling off. Euro Aussie, beautiful short whenever it happens. Yeah, I do agree with you. Reaching a deal is good for euro because it affects USD. USD is a safe haven. USD is a safe haven, but depends on what's happening. If you have tariffs, if you have Trump tariffs, then it's not a safe haven. Then this happens. And Trump tariffs is an uncertainty. But if you have a war, if the US invades Iran, I do think the dollar could catch a bid on that. So all depends. It all depends. I closed my USD CAD short for break even and I went long on it. Well, I think that is a smart decision. Of course, not financial advice, but I think that is a good decision. Staying away from dollar CAD. If anyone here is an aviation enthusiast, would you would see that USA recently sent a lot of more fighter jets and B-2 stealth bombers towards the Middle East. That is interesting. They sent a carrier as well, didn't they? So Trump is kind of saying, look, we have the army near you. Be careful what you're doing, blah, 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 blah. Yes, an understanding is not an agreement. They want to keep us on our toes. Yeah, until they get it in a written form, it's still not resolved. So it's still not going to have a massive, impact. Last thing for today. Bitcoin doing nothing and being bearish. I don't even want to waste my time on that. Let's see, one more interesting thing for today. JXY going lower, possibly because of that Iran news. DXY up. Oil down. So oil, let's do oil. That's why I'm having a tough time placing trades on oil. It is so much impacted by geopolitics. Geopolitics massively control prices of oil, and geopolitics can flip in a matter of seconds. So you can have a war, you can have drama with Iran, with Russia, with Ukraine, with Venezuela, with the US, and oil prices could go wild. That's why I personally don't have a massive edge. I'm sure there are traders out there that do have a massive edge on trading oil. So you need to know what you're trading. You need to know how it moves. And in my opinion, currencies move a lot better. Currencies and even indices are easier to understand and easier to execute positions on. That is about it. If you want to participate in the giveaways, you can find my live stream schedule right here. So tomorrow I'm on at 11:30. Thursday, 10 a.m. Friday is going to be 10:15. I'm doing a giveaway, 1 account per stream. So if you want to participate, definitely join my segments. Thank you very much for watching. Good luck in the markets, and talk to you in the Discord until tomorrow. Tomorrow I'll see you on the stream. So goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.